In today's interest rate markets, let's take a look at the 10-year note futures as they're experiencing some selling pressure today. 10-year note futures are coming off the highest close in a month to trade lower today, and currently we're looking at the futures market price at 110.25, so back below that 111 handle where we did close over that yesterday. Some selling pressure to move through the session today, and driving factors, a couple things influencing the market. Number one, early in the session, we did have the weekly jobless claims, and the jobs data is front and center this week as several numbers have been coming out, and tomorrow highlighted by the non-farm payrolls. Weekly jobless claims coming in below expectations. We did see an increase in claims, and so that caused a little bit of hesitation in the markets, as that's the second week in a row that that number has come in a little larger than expected. But really, the focus appears to be on the U.S. debt continuing moving forward. Fed officials have been discussing it to some degree, also focused just on inflation front and the dynamics within the interest rate environment. But really, the headlines continue to focus on the U.S. debt, and I think that that's having a weighing pressure in the market today, and outweighing, I should say, some of the other data points that came in a little bit weaker than anticipated. However, tomorrow, certainly the jobs data could shift this dynamic, as we do have non-farm payrolls coming out early in the session tomorrow. Highly anticipated non-farm payroll report. Yields, that 10-year yield is up 3 basis points today to 439 basis points, so we're seeing it tick higher today. And the yield curve is moving higher and a little less steep today. So what's going on is we're seeing selling pressure more prevalent in the shorter dated futures, particularly the 2s, 3s, and 5s. So we're seeing yields up about 5 to 6 basis points. Or the back end of the curve, the 30s are basically unchanged on the day, but the 10-year, we're seeing a yield up about 3 basis points. So therefore, a bit of a flattening of the curve today in the price action, as we do anticipate and move towards that non-farm payroll tomorrow in the markets.